Hello and welcome to this Wealth of Advice market update on the 23rd of January 2025. It is the first update of 2025. I was only recently back from my Christmas and New Year's holiday last week, so there's been a lot to get updated. We've spoke with various fund managers over the last few days to get what their thoughts are on what 2025 may look like. And as I say, a lot's been happening. You'll have seen that on the news. Across in America, the biggest investment market in the world that dominates kind of everything it seems right now, Donald Trump was inaugurated this week, immediately signing a number of executive orders and has stopped short of announcing immediate tariffs, which a lot of people might think it would be a negative impact in certain respects. But US markets are going up nicely. Certain stocks that Donald Trump is kind of linked to, or some of his associates, some people might say cronies are linked to, are going up very nicely as well. He did say that he was going to stop the Russian-Ukraine conflict within 24 hours of becoming president. That hasn't happened yet, but I do know that during the night last night he was sending out tweets saying that Vladimir Putin was foolish for continuing this war, and if it doesn't stop soon, he's going to increase tariffs even further on Russia and countries who deal with Russia. So hopefully that conflict does start to dissipate in the coming weeks and months. 2024 was a really good year for our clients' portfolios, no matter where you're invested. As a greedy investor, I was very disappointed with the numbers that came through in December. December was a negative month, but as I say, I'm sure most clients watching this video as well are also greedy investors. It would have been nice if December was a positive month. Unfortunately, it wasn't. There was a lot of negativity floating about in the world after, as I say, a very strong 11 months leading up to December. But the worry about sticky inflation and the prospect of slower interest rate cuts in 2025 did have a negative impact, especially on bond markets and such like. And we opened 2025 with a few worries and fears about what was going on in the bond markets. Was there too much government debt? Had the government done its numbers correctly? But then thankfully markets have been very buoyant in the month of January. I was looking this morning at one of the medium risk portfolios that we have, and it's up over 2% already in the month of January. And if you look at the negative, I think it was 1% in December, you kind of can say, well, that has been overcome. So I'm very pleased with how 2025 has started, and hopefully it continues thereafter. So we mentioned one of the fears that the markets had in December was that sticky inflation was going to continue. Inflation will continue if people are earning more, and a lot of people will look at this chart on the screen now and say it's a positive thing, and I totally agree. If you go back from 2010 to COVID 2020, UK wage growth was really flat, and there was some stories back in the time, which I think we mentioned on here, that UK wage growth had been slower than in Victorian times. Well, UK wage growth has increased over the last few years, and as you can see from this graph on the screen, real wages are rising at the fastest pace for more than 3 years, up over 3.4%. From September to November 2024. So those people out there who have felt the pinch because of high inflation, thankfully are getting more money paid to them in the wage packets each month. December did see, as I say, this choppy period for investment markets when we thought interest rates wouldn't be cut very much in 2025. But if you look at the UK GDP figures, the UK economy only grew at a very lacklustre pace of 0.1% in November, which was below the expectations of what markets were predicting would happen. And because of this, we think that the Bank of England may cut UK interest rates in February. The ECB, the European Central Bank, they're also having their meeting in the coming days, and they're expected to cut European rates probably more aggressively than the UK and the US we're reading. So UK rates hopefully will continue to come down, which is obviously good for those people with mortgages and other debts and such like. And I think it'll be good for the UK economy in general if rates can get back closer to 4% as a long-term kind of target, because we're currently around about 5%. UK CPI, which is our measure of inflation, it fell to a lower than expected rate of 2.5% in December. That's good. The long-term target, as we always hear, is 2%. All over the world, actually, this 2% rate to be hit all the time, but it's good that we're down to 2.5% in December. As I said on the previous slide about UK interest rates, it's the 6th of February, the Bank of England next have their meeting. As I say, with the rates currently being 4.75%, there is hope that they'll come down to 4.5%, which, as I say, we think will be good. US inflation rose to 2.9% in December. This was within expectations. The US economy is a lot different to ours. You've got to remember over there, most consumers who have a mortgage have a 10-year, 15, 20-year fixed rate mortgage in some situations. So when we saw interest rates rising, it didn't really affect the US consumer, but at the same time their wages were going up, so they continued to spend. Obviously energy costs over the last 12 months, the price of oil and such like, and petrol and diesel and such like, people have seen hasn't really come down or went back up. So the US CPI rate getting to 2.9% in December wasn't a shock to the markets, and as I say, I think 2% is a very ambitious target to get to. So we'll wait and see what the US are going to do with their interest rates in the coming months, and whatever the US do does have a massive impact on everyone else. So we now look at market performance. As you can see from the market indices performance over the last 3 months, very choppy there. The S&P, the top 500 companies in the US, up 9.22% over that period. The FTSE 100, very, very poor, languishing behind there. I think since the budget in the UK, there was a lot of negativity came through, but it has started to rise again in recent days, but that's up 2.77% over that 3-month period, with the MSCI World Index in the middle there of 7.87%. When we look at the full 12-month growth, FTSE 100 done very, very well, 14.5% over that period. But again, the S&P dwarfs it, almost double the returns of 28.85%. And if you look at all the investment portfolios, whether the wealth of advice managed portfolios, Royal London Prudential, Legal in general, whoever it may be, the US is still the dominant investment market in there. Spoke with an investment manager just this morning, whilst they were saying UK and European stocks look very, very cheap. They might be very cheap, but they're not going to go up as much as what the US stocks are going up. There will be a time when we should buy more, and all fund managers will buy more UK and European stocks. But when you look across Europe right now, there's a lot of political situations going on in France, Germany and such like, UK, and a little bit of concern and uncertainty about what our Chancellor and government's up to. So the US will remain dominant. We now look at the 5-year chart. And that's just a huge, huge disparity. So although the FTSE 100 is up 14% over the last 12 months, it's only up 12.3% over the last 5 years. And that period post-COVID, it took a long time to recover, whereas the US market and the MSCI World Index up 93 and 88% respectively over those periods. So thanks again for listening to the Wealth of Advice Market Update. Hopefully you're as positive as me that 2025 is going to be a good year for markets and investment returns. Obviously we don't have a crystal ball, we don't know what's around the corner. People might not like Donald Trump and the things he gets up to, but him coming into power this week has certainly been a positive for markets. Let's see what happens in the coming weeks and months on that. Hopefully the geopolitical risks of what's going on in UK and Russia do start to dissipate, especially also with the stuff in Israel and Gaza and that sort of stuff. So hopefully 2025 can be a lot more calmer. As ever, if anyone ever needs to get in touch, please give us a call, email us, contact us through our app, and we'll be in touch as soon as we can. Thank you.